You've worked hard, saved money, and now you want to make sure your wealth is safe and even grows over time. But managing large sums of money or valuable assets can be complex, especially when markets fluctuate, laws change, and life throws surprises your way. This is where trust banks come in. They handle all the heavy lifting of asset management while you sit back knowing your financial future is secure and well managed. Let's break it down. Trust banking is a specialized service where banks or financial institutions manage assets on behalf of their clients. These clients can be individuals like you and me, or large corporations, institutions, and even charities. The idea is that the bank holds and manages the assets for the benefit of the client, taking care of everything from investing to distributing assets when necessary. Imagine it this way: you have valuable assets, whether it's money, property, or investments. Instead of handling these yourself, where you might face complicated legal rules, tax issues, and market risks, you hand them over to a trust bank. The trust bank then acts as your asset manager, ensuring everything is handled with your best interest in mind. There are three key roles that trust banks play, and these are critical to understanding how trust banking works. Let's break them down. Asset management. This is the bread and butter of trust banking. The trust bank takes your assets and invests them to grow your wealth, whether it's stocks, bonds, real estate, or even starting a business venture. They strategize to get the best return on your investments while minimizing risk. Fiduciary responsibility. This is the legal and ethical obligation that the trust bank has to you. In simple terms, they must always act in your best interest. Every decision they make about your assets must prioritize your benefit, not theirs, not anyone else's. It's like having a financial guardian who always looks out for you. And lastly, trust administration. Trust banks manage the administrative sides of things, like distributing assets according to your wishes, especially in estate planning. For example, if you set up a trust for your family, the trust bank ensures that your heirs receive the inheritance exactly as you planned, without getting caught up in legal battles. These three roles, managing your assets, acting in your best interest, and ensuring your financial plans are followed, are what make trust banking such a powerful tool. Now, let's take a closer look at fiduciary responsibility, which is the core of trust banking. A fiduciary is someone who manages assets for another person, and they're legally bound to act in the best interest of that person. In the world of finance, that's a big deal. It means the trust bank must always put your interests first, even if that means they earn less profit. This isn't just a recommendation, it's the law. Trust banks can't cut corners or take unnecessary risks with your money for their own gain. So when you place your assets in a trust, you can be sure that the trust bank is working for you, not against you. One of the most important services trust banks offer is estate planning. This is where things get really personal. Estate planning is all about ensuring that your assets go to the right people at the right time and in the right way after you've passed away. It's a way of providing for your family or chosen beneficiaries without leaving them a legal mess to sort out. When you set up a trust, the bank becomes responsible for distributing your assets according to your instructions. For example, if you want your children to inherit your house, but only after they turn 25, the trust bank will ensure that happens. They also handle tax planning to minimize how much of your estate is lost to taxes. Trust banks don't just manage personal wealth, They also play a big role in corporate trust services. Think about large businesses that issue bonds to raise money. These companies need a neutral third party to oversee the entire bond process, ensuring that bondholders are paid their interest and principal on time. Trust banks take on this responsibility. Besides bonds, trust banks also manage corporate escrows, holding funds temporarily during business deals until all conditions are met. Whether it's a merger, acquisition, or corporate restructuring, trust banks provide the financial expertise and security needed to make sure everything runs smoothly. Risk management is another critical function of trust banking. The financial world is full of uncertainties: market crashes, economic downturns, interest rate changes, you name it. Trust banks are equipped to handle these risks by creating diversified investment portfolios that balance risk and reward. The goal is to protect your wealth while still aiming for growth. Trust banks don't put all your eggs in one basket. Instead, they spread out your investments across different sectors and asset types to minimize potential losses. It's like building a safety net for your finances. Trust banks also manage retirement accounts and pension funds, ensuring you have a comfortable financial future. Whether you're contributing to a retirement account today or receiving payouts during retirement, trust banks make sure the money is managed properly and available when you need it. They help grow your retirement savings by investing the funds in a way that balances long term growth with risk management so you don't outlive your savings. And finally, let's talk about charitable trust. If you're passionate about giving back but also want to gain some financial benefits, setting up a charitable trust is a win win. These trusts are designed to donate to causes you care about while giving you tax advantages. Trust banks manage these charitable trusts to ensure your donations are used properly and continue to make an impact long after you've set them up. Whether it's education, health, or the environment, your trust ensures that your legacy lives on. Let's quickly recap what we've learned today. Trust banking manages and protects your assets. Fiduciary duty acts in your best interest. Estate planning ensures assets go where you want. Risk management balances risk and reward. Retirement funds secures your future. Corporate services helps businesses with financial transactions. And charitable trusts supports good causes with financial benefits. Trust banking is essential for both individuals and businesses, providing security, growth, and peace of mind when managing wealth. So, how does trust banking affect you? Whether you're planning your financial future, starting a business, or thinking about making charitable contributions, trust banks are key players in ensuring your financial plans are executed seamlessly. The more you know, the better you can plan. Thanks for watching.